Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indici tutti in territorio positivo, il Dow Jones viaggia ancora su livelli record, ma parliamo della giornata della settimana con il mio ospite qui sul floor. Come vedete è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neil Securities. Kenny, ben ritrovato.
How are you?
I am very well, how are you?
I'm good, thank you.
So Kenny, we are starting the week with a good in a good pace. I mean, the Nasdaq is totally leading today. The tech is leading, and the Dow Jones is above now, record level. So, what are your thoughts? I mean, Ukraine is not that relevant anymore for the market.
Right. Well, I think actually, we saw that vote last night on Sunday. We saw that there was no real clash and outbreak. There was no civil war that got ignited. And so therefore the markets are relaxed. They've now come to the realization that Russia, the Ukrainian situation is going to be what it's going to be. Russia's going to start to try to do this land grab and revisit what Russia used to be prior to the Reagan-Gorbachev years when communism really fell apart, right? And so the market's now accepted that fact, right? They've accepted the fact that it may happen. As long as it happens with no bloodshed, the market's going to be okay. If there starts to be civil wars and all that in parts of the country, in parts of that region, then I think the market will once again be concerned, right? But I think what the market's telling you is they've put that aside. They understand it. Investors understand it. Not the end of the world. China, they came out over the weekend and said that the Chinese president came out over the weekend and said that we're going to have to get used to this new normal, which is a slower growing China. And look, you don't see the world falling apart, right? You don't see the U.S. market falling apart. And that's what people, strategists, analysts were so concerned about. A slowing China was going to be death for the U.S. market. In fact, it is not, or at least not yet, right? We've seen the market now, it's testing right here at the highs on the S&P. The Dow certainly is broken out, but the S&P, representing a broader market, is still testing right here at the highs. You can feel that it wants to go to 1900 just because it's a round number, right? It's a new century mark and at least wants to get there. You can almost feel it. But what has really changed? Not a whole lot.
And also, this morning, it's noticeable what we see in technology, because technology, as we know, has been like a signal of risk off. We have seen technologies and small cap stocks really abandoned by investors, and actually that ignited a couple of factors, a couple of expectation, from one side. The fear that the market might actually follow the rest of the market, and the other one instead positive, that we might see another round of M&A within the sector that can actually push the market up. What are your thoughts?
Well, it's very interesting. I certainly think M&A is going to be a very, very active asset class this year, right? I mean, we're seeing it happening not only in tech, we're seeing it happening in the healthcare space, in the pharmaceutical space, and so it's clearly very active, and I think that is healthy for the market. I do, though, think that this little bounce that we're seeing, led by the growth names, the momentum names that have been under pressure, is more of a bounce, right? The Russell's very significant because not only did it break its 50 and its 200-day moving average, it also broke its longer-term uptrend drawn from November of 2012. That's significant because you want to see where does the market continue to stay below that, and that becomes resistance, and if it does, what does that say about the rest of the market? A broader pullback would not be unexpected, and so I think today may just be kind of an outlier. I think we may see this rally today, but then the market once again kind of go into this corrective mode.
And also because today we don't have that much in the calendar anyway, so probably it's, as you were saying, it's a one-off.
Well,
yeah.
It's much more geopolitical today because there is no economic data, right? And around the world, it was relatively quiet. And so all eyes are really focused on the geopolitical stuff being Ukraine.
And a lot of economic data instead we're going to see the next few days. So probably that could be the catalyst for the rest of the week.
Well, and I think that will set the tone, because I think now that we're through earnings, and earnings did not really disappoint. It came in right really as expected. But people want to make sure that the U.S. macro data is in fact improving the way that they say it is. Now, for the most part, the market's already discounted the improving macro data because we've been talking about it for 6 months. And the market discounts out about 4 to 6 months. And so it's already kind of taken that into effect. What it's going to have to see is much more consistent strength in the macro numbers going forward. That's what's then going to push it to a new trading range.
So now technically you were saying that we are getting close to 1900. In case we can reach that level by the closing day today, you think because it's a one-off that might ignite some correction in the next few days?
Well, I think it's going to certainly hit some resistance, and we can see that right now. You know, we are up 15 points on the S&P, right at the 1888, 1890 level, which is significant resistance, and so we're kind of feeling it right now, where the market is running into some headwind here. So it's going to take a lot to just push this market to 1900 today. It doesn't feel like we're going to get it. This feels like it's going to churn here all day, but even if it does that and it closes here, that will set us up for a push higher, right? I do sense, though, that the long-term asset managers will take advantage from here into the 1900 level to raise some cash and put back to work in names that have not performed so well.
Technology possibly.
Certainly one of them. I mean, look what's happening today.
Well, thank you very much, Ken, and have a great week.
Thank you, and you too.
E grazie a voi per l'attenzione. A domani.